Welcome, it's the first week of the new month. We have a busy week ahead on the calendars with the US employment data figures. We will also look into the Asian giants and geopolitical events. Here to help us out with the information, Bob Mason from FX Empire. This is your week ahead. Hello Bob, and thank you once again for joining us. Let's dive into the matters of the upcoming week. Will the first week of next month bring notable monthly macroeconomic data?
Yeah, it's a busy week ahead on the economic calendar. For the US dollar, you've got private sector PMI numbers for August, we've got finalized market numbers, and then the all-important ISM figures. So expect manufacturing and non-manufacturing numbers to garner plenty of interest. Key will be non-manufacturing, obviously service sector activity is key to the US economy. We've got factory orders, ADP non-farm employment change, the weekly jobless claims figures, and rounding off the week, we got the non-farm payrolls and unemployment rate. We're going to need to see that unemployment rate continue to tick downwards to support, any sort of optimism towards the economic rebound that needs to be driven by consumption. For the euro, similar economic data. We've got finalized numbers out of France, Germany, and the Eurozone in terms of private sector PMIs, and Italy and Spain's numbers. We've got German retail sales figures and German factory orders numbers as well that will garner plenty of interest. Obviously for the Eurozone, there's retail sales numbers as well. So those consumption remains key. Service sector activity needs to be the key driver for the economic recovery. For the pound, it's a quieter week. Really the key number on the week will be finalized private sector PMIs. Any revisions to the prelim service sector numbers will be key for the pound in the week.
So most likely, among the major currencies, the US employment data will be on the spotlight. Besides the majors, what should exotic and commodity currency traders should look forward to?
For the Aussie dollar, it's a particularly busy week ahead. Start of the week, we've got company gross operating profits and private sector credit figures. That will garner some interest, get an idea of how business and credit is going. Midweek, we've got GDP numbers for the second quarter. Then we've got trade data and retail sales figures. Obviously, the RBA is particularly interested in consumption, so expect plenty of interest in the retail sales figures at the end of the week. Main event of the week, however, is the RBA monetary policy decision on Tuesday. Will they stand pat? Yes, expectations are so, but will there be any talk of further support following the second breakout in Victoria and lockdown measures? At the end of the week, I guess the RBA would want to have the retail sales figures before the Tuesday meet, but that's not happening. So expect plenty of movement in the Aussie dollar. For the Kiwi dollar, quiet week ahead. We've just got business confidence numbers at the start of the week. That's going to be material, so expect some movement there. And then shifting to the loonie, we've got trade data, and then we've got employment figures at the end of the week as well. So expect plenty of interest in the employment figures, and then there's the IV as well that will garner some interest.
In fact, there is a lot of data to process in the aftermath of a quiet period for commodity currency traders. In the meantime, are the Asian giants, China and Japan, set to put up loads of macroeconomic data?
For the Japanese yen, relatively busy week. Start of the week, we've got industrial production figures and retail sales figures that will draw some interest. Obviously, retail sales has been pretty dire out of Japan, so we're going to need to pick up in consumption there. Later on in the week, then we've got private sector PMI numbers. These are finalized numbers that should have a relatively muted impact, barring a marked revision from prelim figures. For the Chinese yuan and general market risk sentiment, you got the private sector PMIs for August, the MBS numbers at the start of the week, and then the all-important Caixin survey numbers in the second half of the week. Expect both service sector and private manufacturing sector activity numbers to have a marked impact. Devil will be in the details. Obviously, we're going to be looking for increased new orders, particularly export new orders that have been pretty weak of late. So, those will be of particular interest in the week ahead.
Moving away from macroeconomic data, are there any geopolitical events going on at the moment which could impact the Forex market?
Finally, on the geopolitical front, well, you've got US-China tensions that have been easing, positive updates from trade talks, and China agreeing to stick to that phase one agreement. What a boon for Trump, who's lagging Joe Biden in the polls at the moment, so that should provide him some support. Really though, obviously presidential election fever, that's going to begin to start heating up. So I expect that to have some impact on the markets as the two battle it out. It's going to be a bit of a dogfight. Then you got Brexit, that's not going away. The chances of a no deal are increasing. We're going into September now. So there needs to be progress. If there's no progress by the end of September, then there's no deal. So expect plenty of news news chatter on that. Other than that, there shouldn't be too much other than a possible flare-up between the US and China again. Obviously, Trump continues to target tech stocks out of China, so that might rile them up, remains to be seen. So those are the geopolitical risk things. And then on the COVID-19 front as well, we're going to need to see continued news of progress towards a vaccine and effective treatment to placate the market and the recent uptick in new COVID-19 cases.
That's all for today. Thank you, Bob, for joining us, and we will see you again next time. That was the week ahead with Bob Mason from FX Empire. Keep up with our latest developments and follow us on all of our social media outlets.